Good evening, Speaking Forex. This is Gregory here. It is currently 10:37 p.m. Pacific Standard Time, May 3rd, 2012, and I just want to give a brief update on our trade of the Aussie US dollar. If you can recall, I actually entered at 103.00 yesterday, and I was looking to hit my profit at 103.45. Unfortunately, I was not able to hit my target. I was asleep, and when I woke up, I was actually close to break even because the high for the day was at 103.36. So unfortunately, the market was not able to go up another 9 or 10 pips to fill my limit order. But I decided to hold on the trade and risk another, I believe it was 15 to 20 pips, because on the daily, as you can see, we had this pin bar formation. And so what I was hoping is that price would actually be contained within this area and continue moving to the upside. And at that point in time, I would have actually removed my limit order at 103.45 and probably looked to exit around 103.65 area, 103.70, depending on market conditions at that particular time. But unfortunately, that was not the case, and I was forced to accept a small loss. Now, currently, we are in a demand zone. If you recall from the original video, we were saying that right here from the green line to this area is the channel, but at the bottom here, we actually have a demand zone, okay, because we had several demand lines beneath here, and so any one of these areas could have actually been the main support level. So we don't know which one is going to be. So you actually look at the whole zone and look at it as some type of trampoline or something, to where as market comes down, it's basically giving in. It's not as firm as, let's say, solid ground, but it's like a net. It's holding, and now we're at the bottom of this particular net, and so hopefully this net doesn't break. Now, what are the trades now if we wanted to trade this pair? Now, if you ever trade semi-long term, and long-term currency trading is like a few hours or a day or a little over that, you notice that anytime you have a week and it's been in one direction for a majority of the week and you're on the last day of trading, you're looking for the shorts. In this particular situation, you're looking for the shorts to liquidate their positions at the end of the week, because fundamentally it makes sense. You know, if you've accumulated 200, 300 pips throughout the course of the week, you don't want to hold on to that position and wait until Monday when something crazy happens and you lose half your position, because stops aren't guaranteed. Because if it gaps up one position, or a certain position, or it gaps up 100 pips, and that can really screw with you. And a lot of people, especially fund managers and people who are handling large amounts of money, they don't want to give up that profit, and which is actually the prudent thing to do. So first of all, when I see something like that, alarm bells always go off. If you go to the weekly, okay, last week, as you can see, that the market came down and closed higher. We had this little pin bar activity. So right now we're actually testing this area again. So that's another confluence that actually tells me that we can potentially move this to the upside. Now, how far we move up, I don't know, but with the combination of the shorts liquidating on Friday, also we are at the bottom of a demand zone. Okay, currently we have this pin bar right here that basically states that there's at least a slight interest as far as buying at this particular point in time. So right now, this is a premium definition of accumulation. Okay, this is the perfect definition of accumulation. Right now, big money is going to either accumulate for a short-term profit, or they're going to liquidate from their shorts from earlier in the week. So we have all of these confluences lining up together for a move to the upside. Now, what are our targets? Now, I already have it drawn out on the screen, but we have from the bottom of the zone to the top of the zone is 63 pips. Now, we can look for just hit that target. Someone who's probably not as aggressive as a trader. If they get in around 102.50, place their stop right beneath 102.30 area. The reason why I recommend 102.30 is because that's a S1 level, if any of you guys are familiar with pivot levels. So somewhere beneath there, maybe 5 to 8 pips is usually pretty safe, just in case they decide to try to sniff out a few stops to trigger more orders. You have to anticipate that sometimes. So you place your stop there, so you're risking about 25 pips, and then you can make about 55 to 60 pips. So you have a 2-to-1 reward to risk ratio, and as I always say, that is a plus EV trade setup. You are basically stacking the odds in your favor. In order just to break even, you have to be right 33% of the time. But we have all of these elements lining up in our favor. We should be right far more frequently than that. Nothing is guaranteed, but we do play the odds, and probability is the name of the game. So if you're very conservative, most traders can probably buy here and sell here at 10300, and especially if you're not going to be around the computer to manage the trade and you want something that's more mechanical, that's perfectly fine. Now, what I think what may happen is price may actually break through to the upside, maybe even go as high as 103.30 or something like that, and maybe close significantly higher. I don't know, and I can't say that it's going to definitely do that, but if it does, what I recommend doing, especially if you're trading multiple lots, if you're trading 2 lots, 3 lots, 5 lots, 50 lots, it really doesn't matter. You can liquidate part of your position if you want, let's say at 103.10, 10300, something like that. If you get in around here, liquidate some of those lots for profit, bring the rest to break even, and manage the trade and see if it actually penetrates us to the upside. You can do that as well if you're actually one of those imperturbable traders who really don't get caught up in all the chaotic noise in the short-term intraday. But if you are one of those traders who get caught up in the noise and the chaotic nature of the markets, it is better to actually make it as mechanical as possible and walk away from the computer. Now, so the name of the game is to anticipate what the market is going to do. And you don't want to trade the anticipation, but you want to have a plan of attack ready based on what you're anticipating. So if we anticipate the market to test this area, we already have a plan whether to liquidate or our whole position or liquidate a partial position and manage it accordingly. Because we anticipate all of these factors with the shorts liquidating, the retest of last week's low, the pin bar at the bottom of the demand zone, this pivot level at 102.50, 102.50 half number. The more I'm talking, I'm actually liking this trade more and more. So the name of the game is to anticipate and then not necessarily trade the anticipation, but actually when that particular situation manifests, then have the plan of attack already lined up, so your decision-making ability would be extremely easy and not difficult, and almost somewhat mechanical in nature at that point in time, because you've already done your research and nothing is catching you by surprise. Now, I don't recommend going short. The odds won't really be into your favor. If you do go short, it's probably going to be one of those spike reversals. It's not a prudent way to trade, but to each his own. I mean, if you have a way of trading breakouts, go ahead. But right now, breakout trading hasn't really been successful for a lot of traders, because for breakout trading, you really need strong momentum and strong trends, and right now, that is not the nature of the market. So, on that note, I guess I'll be signing out here. I guess I'll give a quick recapitulation of I guess our plan of attack right now is to buy at the bottom of the zone, place your stop beneath 102.30 area, look for target number 1 around 10300, 103.10, and maybe target number 2. Once we penetrate this area, maybe you can do some type of trailing stop or something, and so you can try to squeeze out as much profit as possible. So this is Gregory here. Hopefully this video was extremely informative. It is currently 10:47 p.m. Pacific Standard Time. I know you guys, it's already Friday, so I think we are officially like the last time zone before the next day. So on that note, take care, guys. Until next time, happy trading, and we will be giving more updates possibly tomorrow or sometime over the weekend for the upcoming trading week. Thanks. Take care, guys.